All right, everyone. Welcome to Tuesday night class. The topic's going to be controlling and composing emotions. So when I initially thought of this idea for a class, my biggest thought process around this specific topic was more so I want to hear more from you guys as a group to see if there's any correlations of repetition with possible mistakes when it comes to the emotional side of trading. I am going to speak on a lot of personal stuff that I've been through that I have used now in the current time to basically improve my trading, knowing what I can and can't do from historical losses or just the buildup of not changing my plan when I knew it was a failure. But it's kind of like an ego thing of not wanting to let that go. And you just want to find a way to make it work without having to change or rearrange your strategy. So I'm hoping we can make this interactive. I'm hoping we can do something outside me just having a PowerPoint because I don't like doing PowerPoints. I don't like the idea of just people looking at a screen that has words. I like to type and kind of do my own thing with it. So I am going to have up this Word document and I want to type stuff as we talk about topics, maybe main key points that people struggle with that I can type out so you have like a visual to look at while we're discussing things. But I kind of want to start by asking you guys, like when you trade, do you feel like you force trades out of boredom? Do you feel like you force trades out of the fact of, yeah, if you want to use voice, go for it. If you guys want to talk, don't be scared to unmute yourself and say something. So iPad, that's your screen there. If you want to say something real quick, go for it.
Hey, hello.
Hey, what's up, man?
Hey, I'm Ansh. I don't know if you know about me. I'm on the Discord chat.
What's your name on Discord?
Ansh, ANSH.
Oh, yeah, man. Yeah.
How are you guys doing?
I'm doing good. How's everyone else doing? Yeah, what's on your mind? Let me hear it.
So basically, I started executing 2 months ago. I was studying charts and all the psychological stuff for the past year, you could say, because I also did not have the funds to trade. Now I do. The problem I'm having right now is I know I don't have to size up right now. I just want to be consistent, and sizing up is way later right now. So that's what I have a 7K port, and I usually use about I think 400 to 500 bucks per trade.
Okay.
And I've recently got, I have TradeZilla, so I was checking my stuff and I got to know my hit rate is really bad. My entries are really bad, which Jarvis also told me, and I'm working on it right now. Like today was, my entries were pretty nice today, but I think Microsoft did not really go my way, but I was break even there. My problem is, so I'm not getting my risk to reward. And also because let's say I just put in 500 bucks, I'm risking, let's say 50 bucks. And let's say I make 30 to 50 bucks, let's say. The next trade I take, usually this is what happens, I'm red. And also on TradeZilla, I see there are days where I'm green, and then I take another trade, I lose money. Like today, I was break even on Microsoft, that was my plan. Then Rippy signaled, I think Tesla, I was up on that, but Rippy then signaled a SPY, and I gave most of my profits away. And this has been like going on and on for past 2 months. I see things are working out, but the only thing is the second trade I take or the third trade I take, I give back my profits, because it's also really hard to manage risk on like a 50 bucks. Because let's say if I'm making 2K, 3K, and I'm risking 1K, I still have 2K, it's easier. But just 50 bucks, it's really hard for me. So I just wanted to know your opinion. How do you manage that? Or should I size a little bit up? Because I've been seeing like on TradeZilla that there are days I'm green. Even if I calculate, I am green actually. But the second or the third trade I take, because of the 50 bucks, I give it away. So I'm having red days for for obvious reasons, but yeah.
So I'm gonna I'm very big on getting more info out of people so I can like get an idea. Are you pretty big on the idea or the fact of like I've only used a little portion of my portfolio, so I want to try and get another trade in? Like, are you not, I don't want to say content, but making $50 in a day? I feel like that would be a big amount for you based off what you told me earlier.
It is, but I also have a 7K port. So, I mean, I see a good setup and I want to take it. It's also usually have like 2 or 3 trades according to my plan. And I see them going. And I'm okay, let's say I'm already green for the day, but my other 2 trades are going, which I could potentially make money. And also I'm fine risking money on that. But then it's, I don't know why, but making 50 bucks and then I lose the 50 bucks and then I stop trading because I don't want to, because I've actually blown away my daily cushion, you could say. Like today, I'm down 50 bucks. I stopped trading. After that, Rippy was signaling SPX, which 100%, and the other one I think went 200 or 150. I did not touch that at all
Mm-hmm. Okay.
because it's just my rule that after I leave my desk, I am not gonna touch, regardless whoever signals it.
So what gave you that mindset of like I'm red right now, so I'm just gonna walk away and be done here? And like when you were green off the first trade, like being a one and done, you're 1 for 1 on the day. I understand the profit is very small, but what if you possibly go back and see, okay, I've been on the first trade of the day in a week, I'm usually 9 for 10. When I have that first trade that's green, out of those 9 times that I'm right, I usually end up on the day red 3 out of 4 times. So what would be an issue with possibly maybe sizing slightly heavier since you know the probability that you hit green way more than you lose out of the first trade of the day? So you're able to lock in, like if you're sizing 500 and you're selling that at 10% for a $50 gain, you can always maybe size if you're comfortable and if you understand the risk and everything associated, maybe $1,000 for 10% sell, since you know already, okay, I'm usually 9 out of 10 for a 10% gain when I sell on my first trade. So you could lock in $100, or if you're feeling even more confident, you could size less than 500, but hold the trade longer and see if the chart can work its way out. If that
I
makes sense.
am actually planning to do that actually, because after Jarvis told me my entries are really bad, like I am able to manage my risk. Like I get when I understand, okay, I'm wrong by 5 or 10, maximum 10, I get out of the trade. So I'm able to manage risk, and I'm able to understand when I'm wrong. Like today, Microsoft, I understood I was wrong totally, and I got out as soon as possible. I was in some profits, but I got out as soon as possible. But I'm able to manage risk, but the upside is a big problem for me currently. That's what I'm working on. Like the whole weekend, the 3 days I was working on my entries. But yeah, I think I'm gonna size up a little bit more. Let's say $1,000 per trade, and yeah, I'll try that also, as you say.
And I think I remember when Jarvis reviewed your trades, I was looking over them as well. If you can work on your entries when sizing less, it will give you that more of a conviction feel and possibly another standpoint looking at a chart. Because I don't know if you may feel this way, but for me, when I would size, even if it was 10%, 20%, when I was comfortable trading, sometimes when I'm in the red, I would get more scared of holding than I would if I was up 20% and it came down to 10% gains. That slight drop in the green, it would make me want to wait and get more money than vice versa, being red, say 30%, and it goes down to 40%. I'm just thinking, I'm just going to hold, or I got to get out right away. I can't wait to see what happens. Sizing light kind of took that energy out of me. And it made me realize I can focus on entries a lot better, because when I put that risk to a reward factor, I can try and get in at the least possible risk associated with this light size. And I may be able to hold to see if it can work its way out. And if I am correct with the actual zone or just the trend entering not properly, but just maybe a lower risk, higher reward, sizing light could give you the same return as sizing that $500 possibly. And it should take off a little bit of that questioning aspect of, should I sell now for green? Is the chart kind of just now forming? And I can use that to my advantage of seeing how the trends form. And maybe since I'm size light, I can just wait and give it time to form its way out. So at this
That also
point,
makes sense.
yeah, go ahead, go ahead.
No, sorry, that makes sense.
Because like kind of at this point, it seems like you're just gonna have to figure out, do you want to take that risk of sizing heavier and then selling the same way you have been? Because if you just size heavier, you'll make more money, obviously, but you'll also be risking
Yes,
more on the downside. And
very
if you
true.
and if you can focus on, like for me, my biggest change when I started looking at charts a different perspective, I would enter with lighter size and I would test those waters of like a lot of people today. I kept mentioning in the chat the 4390 area on SPX. Everyone that's super bearish or they're thinking like we aren't going to keep pushing. When that kept contesting that 4,390 area on SPX, I guarantee there was people thinking to themselves, I got to get puts before it's too late, or this is about to drop and it's going to be so bad. My whole mindset, I was in puts at the time when it was contesting, but I got in relatively before it ever came down to that level. So I sold, and my first instinct is if I got calls right now, my risk is a break instantly. But if I get puts and we bounce just slightly, right away, my emotions are going to come into play and I'm not going to be focused on the chart. So when I finally just took that idea of if I size extremely light, I can practice my execution. I can learn to control my emotions and not have to focus on, man, I just sized $1,000. I'm down 10%. I can't risk $100. So why not just size $100? That way, if I'm down 10%, 20%, 30%, it's nowhere near the same effect as a normal sizing being down only a slight percent, even though the chart is still holding. So I try and have people look at a different perspective of don't really trade for the money, which everyone trades for money. I get that. But end of the day, if you don't know your strategy or the way that you can make the easiest money without being stressed, without having this trading career or whatever you are doing this for be a burden on you, red days you're not enjoying it because you know you messed up, sizing light takes out everything. Because whether you're wrong or right, the only thing that matters, execution, and did you sell properly? The effects of that light sizing won't take a burden on you emotionally. And as you learn, okay, entering where I usually get puts, I did this a few times, sizing very light. I can afford to hold that. So I wasn't too worried holding it. As I did that for weeks, months, I slowly sized heavier as I gained conviction based off my historical hit rate, not the idea of I'm up X amount of dollars in a week doing this strategy. I don't care about that. If I can look back at that and tell myself, okay, I out of 10 trades when I did this, let me type this as I talk. As out of 10 trades, as I did the strategy, I hit, let's say, 7 of those 10. So I end up losing on 3 of them. So just knowing this right away, I already know from a win to loss perspective, I'm going to be green as long as both sides are equal. If I sell 10% for 7 of them and I sell 3 of them for a loss at 10% loss, I'm overall green on that, like 10 trades as a whole. When taking it on a like smaller perspective breakdown, what were my average percent gains on those green trades compared to those red trades? What many people don't really understand, you can look at this from a perspective of, oh, 7 out of 10, that's 70% hit rate. That's crazy. What if on one trade, you had a 80% loss? Right away, if you size the exact same on all 10 of these trades, but you had one trade that was down 80%, you sold like that, unless you have a huge win rate of average of 50%, 60% for all 7, that one loss could take a hit and not even make you profitable, even though your win to loss is in your favor. So when I started sizing light, my whole mindset changed. I wasn't focused on, man, I'm 4 for 10 on the week. If I have one trade out of 5 that goes 200%, and those other 4 losses are say minus 20%, minus 10%, I'm green overall, even though I could tell someone, oh, I was 1 for 5 on the week. Without giving that detail, people are probably thinking, dude, that's horrible. But risk management wise, emotionally, I could hold those trades. I could make them work in my favor because I'm learning how to not have emotions. I don't care about the results of money. I don't care about my win to loss ratio. I'm focused on, okay, if I can learn to play the chart and not sell off a 10% gain because I'm oversized, as you size up and scale up in your position sizing, nothing changes. people look at it like, well, if you're sizing more, you can lose more. Okay, I get that, but focus on what you just tested out with light sizing. The idea of let me type this one more time. So you have one win and you have 4 losses. That one win gave you let's go 200%. So you had one win, you had a 200%. Well, let's make it more reasonable. Let's make it actually seem logical for people. One win was at 80%. You had 4 losses, each being, let's say, 15% loss. When looking at this, if you do the math, overall, if you size the exact same for all 5 of these trades, if you size $100 for each of them, for this winning trade, you just locked in $800 or $80. If you size $100, 80% win, $80 locked in. If you have 4 losses at 15% loss, you lost $15. 20. Yeah. So yeah, iPad just said it. With having a 15% loss on 4 losses on 100% sizing, you're losing only $60 overall. Now, like I was talking about earlier, if you tell someone, oh, I was 1 for 5 on the week, do you really think they're going to believe that you were green unless you break down your trade strategy, or at least break down what you did, what you took, your overall gains per trade? Looking at this from only the win and loss, it looks horrible. But when you look at that one win was 80% and you limited your losses, you were overall green, even though you lost 4 times. And that's literally what we call, it's either, I think it's 4-to-1 risk to reward, or no, 1-to-4 risk to reward. For every win, you can have 4 losses. But if you want to make it more logical, for every win, if you lose 5 times, you're break even overall. That is an amazing goal to have with a strategy. If you know, okay, I just had 1 loss, logically, and going off my testing, my back testing, I should win at least 4 out of the 5 next trades. And even if you don't win those, or vice versa, my bad. If you lose 4 trades, you're going to win 1 eventually. And that 1 trade is going to outweigh all those losses, only because if you sized correctly for all of them, you sold your losses when you said you were going to, you had that conviction of, okay, if this level breaks, I'm going to sell. And if you calculate it out, okay, if I do sell on this level break, I'll lose roughly probably 20% on this trade for that contract. You already know ahead of time before entering, your risk is a 20% loss based off the chart, not just the idea of, oh, I'm down 20%, I got to get out. I told myself I was going to sell at 20%. When I size light, I'm only selling and holding based off the chart, because I'm not focused on, oh, I'm sized in $1,000. I can't hold up 50%, $500. I need that. But if I'm sized in only say $50, being up $25, you don't have that hunger of money. Like, I got to get out right now. You're focused on the chart and what you basically pre-plan before entering. Money can have such a big effect on emotions. And I feel like so many people don't realize that until they grow a small account to a few thousand or even 10,000. And then before they know it, they're oversizing, they're losing $1,000 in a day. And then finally the emotional kicks in of, I got to get this money back. And if they don't properly size, they don't sell for a loss when they're supposed to, they're going to be right back where they started in half the time it took them to get to that point of $10,000 possibly. Everything changes when you oversize. Everything changes when you chase the plays, you chase that success. It's just a huge, like, nonstop running in a circle. And until people start to take down the breaking of trades and understanding, like, the hit rate doesn't honestly matter. If you can withstand not having major losses, which everyone has major losses, don't think people are perfect. I still have those issues. I oversize when I'm overconfident, and then it puts me right back into reality. Everyone has those moments. They look at the chart, oh, there's no way this is going to break on the downside. It breaks down, they average in more. It happens to people. The only way you can grow past that is just accepting the fact, I can't do that. You're going to feel the need to want to do it. You have to compose all of that, like, internal thoughts. And that's why when I teach, I'm always referring to mindset. I'm always referring to the psychology of all this stuff. It's all like mind. The money's going to come if you learn what you're doing. And I feel a lot of people don't understand that. They grow an account super quick off of oversizing. They feel they can keep doing that to make the bigger account they just got even bigger. soon enough they're losing money they never even had in their port in the first place. Does anyone have any questions, any thoughts about what I just talked about before I move on to another kind of topic, I guess I can say? I want to hear what you guys are thinking as I'm talking about this. Like I know for a fact there's at least one person in here that has an issue like that currently. And if you don't, there's a reason why you're here to learn. There's something that's bothering you. There's something that you want to get better at. There's something that you just can't figure out about yourself that's holding you back. Everyone has something to work on. Everyone has a strategy that can be improved. They have a mindset that can be tweaked a little bit to handle emotions better. And I want to see like any questions you guys have. I want to hear what you guys have to say, and I can elaborate off of whatever topic or sentence that you send out to me. Not sizing properly was my problem for a while. Not sizing properly is literally the game changer. I understand the idea of, oh, if I oversize on this, well, not oversize, if I size heavy on this one, that's your initial thought going in. You're not focused on I'm oversizing before the trade. Your mindset's just saying, man, if this setup works out and I size heavier, I can make an extra $500 today. So without even thinking, you're focused on the upside, not realizing where am I going to sell if I'm wrong, or how much could I be risking on this trade if I size too much. I was watching prices instead of the chart. So yeah, watching prices like the P&L, the percent that you're up on the trade, the money you're up. I don't want to say it's a bad thing to do, but it's all about focusing. The chart can hold value of a support. If your inputs, a stock can hold a rejection at resistance. But when you're looking at the price and that consolidation starts to happen for options, your value will go down. And that's what you're going to be focused on. The idea of, man, my contract's only up 20%. It's been around this area for the last 20 minutes. Look at the chart and see like what's going on. If the chart's holding and the price of your contract's holding, you understand the correlation with, okay, theta's not eating up this contract. The IV's not losing like that energy, that juice. It's still holding value. You're focused on the right stuff in that moment. But if the stock is holding and the price of your contract is dropping massively, no one focuses on the idea of, well, why am I selling right now? The chart's holding still. Maybe you bought too close to expiration. Maybe you sized too heavy that being down 50% is bothering you, or however much you're down. That's one of the hardest things that you have to like overcome. And I tell people, if you have an issue holding the contract, play a month out expiration for stocks that are cheap. I'm not talking SPX a week out. I'm not talking SPY a month out. Those are going to be like extremely expensive. And those two indexes still have very high delta and theta affected by like the actual price you're paying. Consolidation is going to kill that contract. It's not very mirrored with the actual stock chart. So when looking at cheaper stocks, cheaper contracts, adding time, you will watch the stock chart and not even worry about the actual P&L, because everything is going to stay the exact same half the time. If you add time to contracts and you find the ones you can afford to size very light and not have to worry about being down 20%, 30%, you'll learn to play the chart like you're buying shares on that stock. When you buy shares, you don't lose value if the stock doesn't move, like how options have that effect. So if you think that you need to work on basically watching the stock, watching the chart, and just only focused on, okay, this support's holding, I'm not going to sell yet. If you play 0 DTE and that support's still holding and you're in calls, you may be down on the trade as it's holding that support, only because no one wants that contract right now. That doesn't have any IV. There's no like push to it. The longer it sits out of the money, you're losing that value, even though the stock is, it may still be showing strength. I agree. I had the same issue. Also, I have a habit of giving up on a trade when it goes down 50%. I just let the option to expire, hoping a miracle can happen. When you do let an option expire worthless or just hold it until expiration, that's fine to do if possibly you may have sold some along the way and that's just a runner you have. If you size light enough to hold that to 0, that's also another concept you can take into consideration. This is one thing I tell people, and I feel like Jarvis and I feel the same way about this. When we play specific contracts that we know ahead of time, this can go minus 99% in the red, and I'm not worried because I sized to lose it all. I got you. So when they're focused on the idea of, okay, if I size light, I don't care if I'm down 80%. I don't care if I'm down 70%. I'm only going to be focused on the chart. I'm only going to be focused on the idea of, okay, if the stock's holding, I don't have to sell because I already sized to lose everything. So I'm going to let the chart play its way out. If I'm up 40%, I can sell for a win because I sized to lose it. So if I'm in the green, I can just take profit whenever. So if you size, let's say $1,000 and you're taking a, let's say 15% loss is your stop loss. So right away, if you can do math pretty quick, you're risking 150 bucks. You know that before entering. If you know, okay, I'm going to put in $1,000 on this trade, I can't risk more than 150 bucks. So my stop loss is around 15%. You're not even thinking about the stock right now, the actual chart. You're just focused on, well, if I size this much, I can't risk over 150 bucks. So I have to sell around that P&L. Why not take, you don't have to take the exact amount you're sizing for the loss, but imagine sizing into a position the same amount that you're willing to risk on $1,000 trade. Think about the emotional standpoint you'll have if you're sized 150 bucks. What's your stop loss? What would your stop loss be, everyone? I want to hear your guys' thoughts. You size $1,000, stop loss is 15% for $150 loss. If you size 150 bucks, what would you put for your stop loss? And this can be like, oh, I do 50% because I don't want to lose the whole thing. But just from this example, or just how you feel personally, what do you feel would be the smartest thing to do? 0, 100, someone said 120, 0. It's the same outcome. That's the biggest thing about this. It's the same outcome. Why size $1,000 and you sell for a 15% loss? And let's say the stock at the lowest point, it was down 30%. Let's say 4 hours later, it's up 50%. That can be emotionally draining. And I'm speaking on that from my personal experience. I'm not saying that because I know how people are. I get pissed off. When I sell for a loss and I'm not even focused on the chart, I go back a few hours later, I check the contract at the end of the day, even though I had a week out expiration, or it's Tuesday and I sold and the expiration was for Friday, and the contract's up 50%. If I would have sized to be able to hold down that 30% the trade was on, so I'm down 30% on this trade of $150 sizing. Ooh, tough math for me. Is that it's close to 50. It's like 53 or 48 or something. It's like $48. Someone do a calculator for me. 45. Thank you. Oh, there we go. It's a is that? Yeah, 45. So you're down 45 at the most. If you're down $45, looking from a money perspective, I understand I was just talking about you're not looking at P&L. But for the ones that will question it and they're going to take a peep, I know people do that. I do it every once in a while too. You look over and you're down $45. Are you really going to be thinking, I got to get out right now? You being down 45 bucks when sized 150 is the same exact thing as being down 4.5% when sized $1,000. So think about that now from that perspective. Would I sell if I was only down 4% on $1,000 sizing, or would I want the stock to work its way out? That's one of the things that I try and use. Why am I sizing heavy if I'm not willing to risk or hold a little bit longer? Someone said, I watch my option premium to manage risk. And that's a good thing to do, is watching the option premium. That also does correlate with the P&L, but you see the bid and the ask, so you see how things are moving. Do you watch the tape along with the option premium prices to manage your risk? The tape of the level 2, people filling. You can see all that stuff on options as well. Okay, good. That's exactly what I do too. So you're able to see how the bid and the ask are fluctuating as people are buying. You can see if people are actually chasing the contract above the ask. You can see all of that to give you that kind of conviction to hold longer. So when being down only $45, someone already responded and said, no, like you're not going to sell on $1,000 position being down 4.5%. I would never sell that soon unless I'm holding this trade for, it's been 3 hours and I just want to get the heck out of it. I'll sell for a 4% loss just to say, I accept I was wrong. The move didn't happen like I wanted it to. I don't want to afford this risk. But when being down 45 bucks, AKA 30% down on the trade, you already sized to lose the whole thing. So you were down 45. few hours later, now you're up 50%. There we go. And this one I can do in my head, $75, don't worry. So now you're up 50%, you're up $75. Now focus on this correlating back to the $1,000 sizing. I like to try and do correlations to get a bigger perspective for people, because a lot of people, and just like how I said earlier, I used to do the same thing. I would only watch the P&L. I look at the chart, but when I see the chart go up, say a few cents, and the contract moves up 10%, and then the stock only pulls back half the amount it just moved up, and I'm red on the trade, it messes with your head. You start thinking to yourself, man, I need a heavy push to get back green now. And as it sits, as it slowly fades off, you go deeper in the red. When I started sizing light, I wasn't intrigued to look at the P&L, because I'm looking at like little money. I'm not focused on the money at that point. I want to see how the chart moves and just learn in the process of, okay, let me track my trades now. So I was down out of 10 trades, 2 of them, I went down 50% and they came back to green. 4 other trades, they went red, they came back to green. So you're starting to see a sequence of, I'm entering good where I can sell out at green, but I have to hold those in the red a little bit. So as you track that, as you figure that out, as you look at your trade history, you start to realize, how can I make entries better to not see red when I enter trades? Am I chasing the play? Am I not buying at the best entry point where my risk is lower? As you figure that out, you're limiting your losses sizing light. So when you do size heavier again, you're not going to be as red as usual. And if you learn that mindset of keeping emotions out the picture, you may be sizing heavier, but you're trusting all that feedback that you had on yourself with your trade history. All of that back testing you are now using, and you're only focused on, okay, so I did the same thing with sizing light, I'll just do the same thing sizing a little bit more. I know my risk, I know the reward, I know that if I have 2 losses back to back, it's not going to weigh me down because wins are coming. I've had this happen before with the smaller size. Emotions get rearranged as you test stuff out. And I get the idea. I don't want to test out a new strategy and only make a few bucks a day. If you want to make money in the future, you have to take that slow path right now. If you want to rush it, be my guest. But the biggest thing I like to say to people, look back a few months from now, or even a few weeks from now, how much farther ahead are you when you look at your portfolio? Or how much farther ahead are you when you just think about the knowledge you've learned in the past week from your red trades or your green trades? So many people hit green and they're content with that, close the laptop, they'll come back the next day. Not every strategy is going to repeat and you're just going to be green every time it sets up. You're going to have losses on setups. Not everything is guaranteed. So if you don't comprehend that, emotions come right back into the picture. Everything flows based off not comprehending what is possible when you just learn a system. If those emotions are in here, like, emotions are going to kill it. And I'm sure people can agree with that. When you trade and you size to a point where you have no emotions, trading is so easy. Adding 2 months of time, sizing so light that you can just let the trade, like, you enter the trade, don't even watch it, because you know, okay, if the stock holds these levels, I don't have to worry about anything. I know a lot of people, they add so much time so that they can comprehend, let's see if the stock can hold, because adding time is not going to lose value. If I'm wrong, I don't have to sit here and watch the stock move. That's the best part about adding time. Can you provide any tips on how to shift the mindset to not average down? I have such a tough time going on tilt and averaging down, resulting in a big red. I am gonna pull up, I'm gonna pull up a chart real quick for you, Pedro. Let's see if I can get this loaded real quick. Peg said adding time has been a huge game changer for me. Peg, if you don't mind typing a short response to this, how difficult was it for you to start adding time? And if it was difficult, which usually for some people it is, how much did you start to realize this is so much easier 2 weeks down the road of doing it, when you could literally have a trade sit and you come back a few days later and you're just like, holy crap, I'm up 30%. I just entered this because it looked good. You let the chart work its way out. She said, helping to build confidence in my trade ideas. I don't feel much emotions while trading, as I know I will manage my risk, as I have confidence that I will cut my losers. So cutting your losers, but have you been good with letting your green trades plan out on the upside more? Cutting losers is always the most important thing, but also for you to cut losses, say at a 10% loss, you can't cut wins at 20% wins or 15% wins, because that risk to reward, you have to go off your win to loss ratio. If you're selling for a loss at 10% and selling gains at 10%, you have to be at least 5 or 10 on green to red to basically be break even. I'm trying to find a way, and hopefully, like me speaking on what I do, it can maybe have you try and find a new alternative. If I have 8 losses and 2 wins, I'm green overall, or at least break even. If I have 4 wins and 6 losses, I know I'm green overall. So it gives me that confidence of, okay, I can lose, but as long as I keep that consistency of sizing and also following my losses when I know I have to cut, 1 win is going to wipe out 4 losses, 3 losses. So it doesn't weigh me down when I lose. If I oversize and I lose 20% of my port in a day, that can weigh down on you. And that's going to make you possibly size heavier next time, try and find a way to get the money back in the same day, even though you probably should step away after making a mistake of oversizing. It's okay to leave the day red, even if you did follow your plan. Having losses is normal. And that's one of the biggest things I try and tell people about. So, Pedro, I have Amazon pulled up, and I'm going to go to the 15-minute because this was more so a little bit of a bigger picture idea. So I'm going to give you an example of kind of how I maneuver around adding if I do. The biggest thing I want to start with, when you add on trades, only add if your initial starting position is not a regular size. So say you have $1,000 account, and this will keep emotions out of the picture. When you size, you'll still have no emotions. That's the best part on the sizing down. If you usually size 1,000, let's say usually size $100 into a trade, when it dropped down where you should be selling, you average in another $100. Why not enter with, say, $20, and when it dips down to where you want to add that $80 that should have been your initial position? Because that way, if you are right when you size the first time, if it works out in your favor, 100% gain on a $20 size is going to give you $20. If you're sized $100, a 20% loss is going to bring you down $20, obviously. So when looking at it from a perspective of, okay, I can size light to start, I'll size in my normal position if it does come down. There's nothing wrong with sizing extremely light, because a lot of people, I feel like they think of, well, if I'm right on the trade, I'm not going to make a lot of money. That's not the point of it, though. The point is you want to see, like, is this strategy working? Is this pattern going to hold? I see something aligning that I think is going to be good, but there could be a pullback. The best thing about a pullback, when you don't size 100% your normal amount, you can get in cheaper if you are incorrect. Or if you're size light, you can sell for that loss and just readjust the whole trade as you see it work against you. So like when going off Amazon, I'm going to try and find a simple way to do this. There's going to be a few pre-market and after hours stuff that may be included, but I want you guys to focus on, let me shorten this real quick. My screen's lagging a little bit. So look at this yellow highlight. You see this kind of double top right here on these 2 areas. So we got a little bit of a double top. One was about an hour and a half in the open, 2 hours in the open. The next day was basically an open push and a reject. So when using these 2 areas, say you're looking to start a position on this day right here that I have this highlight on. You're focused on, okay, I'm going to enter around here. If I switch this down to the 5-minute, this was 4 days ago. There we go. So on the 5-minute, you're looking at this and you're telling yourself, okay, Amazon had a dip. I look at yesterday's closing area around here. This could hold, and Amazon could push to the upside right here. So you want to start in sizing light. You size light, thinking this is going to hold support and it could bounce up. Say it fails. Okay, I have a main support level where this basically double top was back here. So I'm going to size the rest of my position I initially wanted to size at open with Amazon when it dips. So now you're sizing the rest of the position down here and it bounces. Say it fails. Well, you sized in majority at the bottom, so you're going to be selling for a much smaller loss. If your light entry did work out where this yellow highlight is up here, the best part about size and light, this retraction will give you a big enough gain that if you bought in full position and sold, say, a 50-cent push up to here, This little push selling full position is going to be the same amount as sizing light and letting the chart work its way out to see how much this will push. Because in your mind, you want to size in the rest down here. So you're not worried about anything in between because your size so light, you have no emotions on this trade. If you're down 50%, it'd be the same as being down 10%, size and normal possibly. So you have no chance of holding unless you want to be down a mass amount of money. You won't hold this drop if you're sized 100% normal at the beginning. That is one thing that I tend to do often. I will size so light for a swing, and I'll tell people I'm sizing 2-3 contracts. That is extremely light for my normal sizing. But if the trade works out the way I think it will, I'll make enough money off that small position that it's my normal trim for a bigger position size. If it does dip to the area that I'm like, okay, if it hits this area, this level, this support, whatever it may be, I want to size my normal position, but I don't want to wait because what if it doesn't come down? That's why I size light. Because if my level before the main level holds, I want to at least have a starter position in. That way, if it does dip, I'll wait for that moment to size how I want. And if I'm wrong at that last level, I'm selling for a loss right away. There's no headache of holding down 30%, 40%. Hopefully that explained a little bit. What was that question, Matt? Can you provide tips on switch? So shifting the mindset to not average down. I just talked about how I usually average down. Sizing light to start will help you not really get emotional when you are red. So don't think you have to size the normal position right away. If there's nothing bad, like say you want to get in at least 10 contracts on Amazon. So you're like, okay, I'm going to size in 10 right here. Starts to dip. Man, I really want to size in, but I'm already down a massive amount. Can I afford to size in more? Some people say no when they sell. Some people size in and they just pray that it pushes back up. Say you only size 2 contracts right here. As this is dropping, all you're focused on is this right here. If we touch this level, I'm sizing the rest of those 8 contracts. And then if this doesn't hold, since there's a gap fill going down, you're going to sell right away. And if you are right and it does work out in your favor, that average down is going to easily make you go profitable as this pushes back up, possibly back to your initial first entry point. If you don't want to have a mindset of sizing down in general, I just recommend, like, it's hard for me to really explain it because I just don't do it. If I know I shouldn't size down, I don't think about, oh, if this pushes back up, I can make my money back though. If I'm wrong, I don't look at it from a perspective of I have to size in. I'm focused on I was wrong. I'm down X amount of a percent. The chart's not holding like I thought it would. I'm just going to sell. I don't want to size in because initially I was wrong. Why am I going to double down when I'm already wrong? Why not double down at the beginning when I'm so confident? So I try and avoid, let's try and make this money back. Let's try and bring my average down because if we bounce slightly, I can sell for at least break even. I'd rather just accept the fact that I possibly was wrong. Maybe my setup didn't work the right way, so I just had to get out of that position. By sizing to 0, are you okay with selling 10% green on the trade? Risk to reward wise, the play is not the best, or you let the chart form and tell you what to do. So when I personally size for 0, say the stock is holding at a level for, let's just say a few hours, and I'm like watching, taking my eyes off it, watching, taking my eyes off it. If I'm just like in my head, if I start questioning the trade at any point, if I'm like, this is looking kind of weak, I don't know if this is going to work out, I go with the way I feel. So if I'm overthinking it, if I'm questioning the initial part of why I bought in, I'll sell for that 10% green only because there may be a better setup out there. Maybe this isn't going to work the way I thought it would. I thought it would push higher after I entered. So I don't want to risk this hold, even though I'm sized for 0. Usually when I enter, I want to see movement, whether it's put me in the red or put me in the green. Seeing a stock hold, it's kind of draining for me. So don't think it's bad to sell early. If you want to say early, I sold early on this trade, but there's nothing wrong with selling for a small green on a size for 0 trade if you're content with the idea of that. The idea for most people is, well, why would I sell for 10% if the next one I'm going to hold the minus 99%? Like there's no differential for risk to reward. Maybe you just won't have to hold that then. Maybe you have to keep the trade and just see if it works out. That's a very hard topic to really answer, I would say, because a lot of the stuff that I size for 0 on, I add a month or two of time. So I'm never questioning in the first week, man, maybe I should just sell this for 10%. I expect the stock to move within a week when I enter with a month time. Like I'm looking at the bigger picture. If the stock doesn't move the way I want it to, or say it's slowly going down into the red, I may put in more of how much I initially wanted to size if I initially sized for only 0. I sized for minus 99% because I was content with that. And at the end of that, you said, or do you just let the chart form and tell you what to do? If my emotions are heavier than what I physically see on the chart, I tend to just get out of the trade because I don't want my emotions to flare. If I'm ever emotional when I size for 0, there's something wrong with my position sizing. There's something wrong with my thought process before the trade. So I tend to just kind of go with the way I feel and just get out of it at that point and just try and find another entry on possibly a better stock. For me, the most difficult part for adding time was that the contracts are pretty significantly more expensive. I've been buying at least a month and sometimes up to 6 months out. So it felt like I was taking a bigger risk because I was putting in more money up front. What I realized though is that the longer term contracts hold their value so much better. Even if there is a move against you, you may fall down 5 or 10% on the day where the market falls a bit, but a short term con would definitely be down or crushed 50 to 80% down. But when the move happens your way, you're green very quickly and have a ton of time to let it run so that you aren't stressed about selling immediately. That right there is probably like one of the, like, that was a good description, honestly, Peg. Because I remember when I think I used to talk to you about this. I would tell you how I would size for like the move of the stock and I would give it time because when you know a stock takes 2 to 3 weeks to get that, say, $10 move share or $10 share move, you're not going to get a week of expiration. So when you size light and play a month or two out, when the stock just sits there and doesn't move, your contract is not losing value as much as a week of. You're basically telling yourself, buying time on a contract, this is not going to happen right away. If it does go red, don't freak out because we still have, say, a month or two left on time expiration. It calms you down so much because I remember there was a play I called a few weeks ago. The week of contracts were down like 50%, but the following week contracts that we got, they were only down like 10%, 15%. When you add time, your reward may not be as great, but your emotions are out of the picture and you can hold with conviction. That is what trading is supposed to be about, is the idea of I'm doing this based off concrete evidence and not the way I feel. When you have 0 DTE and the stock's holding and you're down 30%, 40%, you get so, I don't want to say freaked out, but you're just questioning, should I hold this trade longer? And this has really helped the longer time contracts. This has really helped my confidence in trusting the charts because allowing a little extra time for a move to happen, even if it's more costly up front, provides a more higher probability of success. And that is also correct. Having time gives you that idea of I can wait and see what happens. And it also gives you, like Peg just said, probability. Having time on contracts, you're not rushing to get out of a play. You're looking at the stock and seeing, okay, where's the next level this share may touch that I may have to take my profits. You're not focused on, oh, I'm up 20% in a minute. I got to get out before it's too late. If I'm up that quick, I can also be down that quick. Adding time, it is so much more efficient, in my personal opinion, especially for newer traders. You understand and you learn to play the chart more. Would you say it gets easier to control / compose emotions the more time you spend in the market? 100%. 100%. I see seasoned traders like Rippy got sizing very heavy on 0 DT SPX and hold more than 30% loss or take an L like it's nothing. So a lot of people that may not know Rippy God, aka Hassan, like how I do, and a lot of other people who have been around for a while, he can easily lose a $50,000 position and not really care. He is very big on the stock is holding. I'm not selling my contracts. While this pattern is still in formation, I'm not going to sell for a loss yet. He has specialized in SPX and he is I like, from who I know, there's many traders out there I don't know about, but from who I know, Hassan is one of the best SPX traders. And there's a lot of people that do it the way he does. And there's also others that do it better than he does and they size less. It's all based off your preference. Hassan is very emotionalist, very he does not have many emotions when it comes to trading because he's done it so long. He understands the game. You're going to take losses. You're going to take heavy wins. You're going to take heavy losses, light wins. He's one of the best examples of actually understanding this can go down 50%, but I size for it. It may be a lot for other people, but for him playing zero DTE, that is his specialty. That is his strong suit. Me personally, I can't size as heavy as him with SPX zero DTE because I have too much emotions for that. That's his style, so he's just used to it at this point in his trading career. I'm a visual learner. I never do my due diligence. Can you give me some daily exercise to do pre-market and aftermarket? So, Vin, if you guys want, do you guys want to do a pre-market session for the academy tomorrow around 9 o'clock Eastern AM? I know Hassan's going to do one, so we can do it slightly before him, and I can break down kind of like what I look for, how to put a level in that I'm not going to touch the stock unless that level touches. If you guys want to do stuff like that, let me know, and we can get some stuff going. Does anyone have any other questions or statements or anything they want to see possibly? It can be involved charting. It can be any question for me if you want to know more. No, it's not too much trouble at all. I don't want to interfere with Hassan, but I don't think if you're just an academy member in the Discord, you can't see the VC. So we can do stuff with the academy, and I'll be blessed to do that with you guys. I mean, I'm sitting here basically all day. So I do not mind if you guys want to do a pre-market breakdown, we can just chat it up. We can even be on VC during the market. Even if you're not trading, I can chart patterns as they form and see what you guys like, see if you guys like how I chart. I don't trade open. My strategy is not open. I'm emotional. Just like this topic, composing emotions, I know not to trade open because I personally can't do it. My hit rate is way worse than it is with reward. And as I journaled that, it was very hard not trading open because it's so adrenaline rushing. You can be one and done within 15 minutes. It was not helping me grow, not even my account, but as a person. I was not learning anything. If you lose it open, there's not much to really learn or try and change because it's more so a guess, but also you're trusting initial volume that isn't very predictable. Any tips on getting over the survival mindset when trading? If you're trying to survive when you trade, that means you're basically like, what's a good way to explain this? A lot of people that have like that survival mindset, they're trying to make back losses they've had in the past. It's like they can't lose more because they're failing, when in reality, you're going to lose to learn. It's very hard to comprehend probably, and you can paper trade all you want, but the emotions and the adrenaline you feel is not the same when you put real money in the market. And that's why when I go back to the idea of like size and light and just trusting the chart, you learn how to trade properly and not off hope. So when you're in that, like, I got to stop trying to just like survive the trade, don't think about trading as survival. Think of it as I have to wait for the best possible low risk, high reward. An example, like with wildlife, a lion and a gazelle, the lion's not just going to attack everything they see. They're going to wait for that one slow animal that they know they can catch. They're going to wait and just like watch the herd, whatever you want to call it, watch all of them at the same time. Which one is the best for me to go after? I'm not going to get the fastest one because I'll have to work harder. When you trade, you don't want to just go for that big win. Oh, I have to get in before it's too late. You're waiting for that weakness that no one else sees until everyone starts going after it. And by then you should be up 20, 30% because you got in when no one else wanted it. That is how you overcome that survival mindset because you're focused on entries and execution. You don't care about surviving. You just care about getting in at the lowest risk, highest reward. The outcome at that point is all in the market's favor. It's not up to you at that point. What stocks would you recommend for a very small account? So when you say very small, I think back to when I was trading a $400 account, a $500 account. I will, let me type this in the Zoom chat. This may be easier. So I'll give you my top go-tos that I love to look at because you can buy 2-3 months out time, and this helps with emotions as well. You can buy expirations 2 to 3 months out right at the money. And these are under $50 to $100 a contract right at the money. They're going to move slow, but you have to understand That's the whole point of playing stocks like this. You are focused on the bigger move. You're focused on what can happen long term with this. You're not trying to make a quick buck on these. And American Airlines, Ford, Carnival, PLTR, PTON. So many people I tell these stocks to. And also, if you want, DraftKings is a little bit more expensive, but that's also a nice one to play for like 2 to 3 weeks out. Those are my like go-tos. Let me see if there's any other question. So the reason I recommend these stocks, you have to comprehend they're going to move slow. They are very cheap price per share. Ford especially, it does not move very fast. So when you're looking at the chart, and I'll pull up, let's do American Airlines. I know it's somewhere here. Oh, that's AI. Let me search it. Oh, no, it's right here. So when looking at a stock that's very cheap, first thing I always think about when I'm looking for an entry, where are my emotions not going to be affected? I could care less about making 100% off a trade. And if you guys were in the charting session, American Airlines rejected and we're dropping right back down to support. So this is what I start to look at. I had this level here on the Monday night charting. That's because historically we bounced there. So when I'm looking at a stock like this, I know going off historical moves on the daily, every week, how much the stock moves, it doesn't move very fast. American Airlines can push maybe $1 or $2 in a week. Maybe it doesn't even push that much in a week and it just consolidates like in these little bull flags or just zoning. So looking at American Airlines, first, I want a low risk entry. My low risk was a pullback to this support, maybe hold there and start to work its way up. When you look at it that way, you add 2 months time, 3 months time. These contracts are not going to be $400, $500. They're going to be roughly, I'd say, $40 to $60 a piece right at the money. So when playing stuff like this, if you say we dip down to like $15.94, if you buy a 16 call for 2 months out, once you're in the money, the value of that contract will not lose as much as out of the money contracts. I understand you're paying more. I understand it doesn't move 100% when it on the week of it would go 100%. We are trading to last long term. A lot of people trade to make money now, and that's fine, but you have to understand just as fast as you can make money, you can lose it just as quick. And so many people don't understand it until it's too late and they never grow back to what they had at one point. I saw someone in I think it was a Discord earlier today. It may have been this chat. It's hard for me to remember stuff very well right now, but someone said they had like a $2,000 account or like $1,000 account. They ran it up to 7,000 and they're right back to about 500 to $1,000. People run up money and it comes down. That's always normal. When you play contracts that have a month time and you're using the larger picture to find zones, you're letting the chart work its way out. You're not focused on, oh man, like if we don't bounce soon, I got to sell for a loss. Maybe I'll average down. Playing time gives you conviction. You don't have emotions on, oh, I'm down this much. All you're focused on is, okay, well, last time the stock hit the support, it took about a week or two to really form and push off. So if we come down here and it takes about 2 to 3 days for it to hold, I'll enter because if I'm wrong on this call entry, a break on the downside, I'm selling. Because the way I look at it, the first stop loss I see if we do break on the downside is around right here. This is the gap fill if American Airlines breaks that bottom support. You're not going to hold the contract that far. You can sell for a small loss, and if it does dip down to here, re-enter calls farther out, like far expiration, right at the money. You're playing the chart. Does that make sense to everybody? It's very, I don't want to say difficult. I keep saying difficult, very hard to do. When you only focus on like week of expiration, 0 DTE, 0 days till expiration, you don't focus on the potential of what you're actually trading. You're only focused on what you're putting in your investment return. There's nothing wrong with that, but what are you learning about stocks when you just buy in and sell off of a P&L? Are you actually learning to enter correctly? Is your execution the way it should be to move forward as you size heavier to keep making money consistently? So many people have a lucky trade, a lucky week or 2 weeks back to back, and they throw all their rules out the window because, oh, I've been winning so much, I'm just going to keep doing the same thing over and over. No system's going to be repetition that successfully. And the one time you are wrong, you may be thinking to yourself, oh, last time I was red on a trade, I held and I went back to green. So you're going to hold that red trade. Your emotions are there, but you don't realize it because you have that ego popping up saying, you're going to be right. Don't even worry. But in reality, your strategy has told you that you need to sell at X amount loss, or this support is going to break. If the chart doesn't hold, I can't stay in this position. So hopefully that is a good like alternative to look at, if that makes sense. It's very difficult to play time on contracts when you haven't done it before because you're not going to make a return like you're used to. The minute you get over that, you're going to realize your account is growing so much quicker than when you go for those big gains, then you have a big loss, then a big win, then a big loss. I don't know if the guy in the Discord pops in here. I don't even know how to pronounce his name. I think he does the daily reviews and profit and losses. Egelmoth, I think that's how you pronounce it. I don't know if he's in here or not. I look at his trade reviews every single day. He journals every day in the Discord, and you guys can see this in the profit and losses. This dude wants to succeed. Dude and or girl. I don't know. I want to specify. I don't know which one. But this person is doing their due diligence. They are recapping all their trade. They're keeping documents. They were tired of losing, and they want to win. They want to make this happen. They want to know what they're doing wrong and what they have to fix so they stop losing and they only win. Ever since this person started doing all this journaling, it didn't start off good when he did, but that was accountability. He learned if I lose, everyone's going to see you. So guess what? His emotions are turned off at this point. He doesn't care if he loses, but if he doesn't follow the plan, he knows he messed up because he is conscious enough to have those emotions tell him you can't do this because you know. Go back to your last journal entry and read what you said. You said you shouldn't hold in red. You did it. You have to readjust now. Once you kick emotions out with trading, I don't care how you figure it out. You play with time. If you usually size $100 in a trade and contracts are 50 a piece, so you buy two, maybe only buy one contract. You have to learn, and you're not going to make as much money. But if you want to learn the hard way, you can size heavy, but you're going to lose as you find what works for you. So my advice from what I have done, what's got me to where I'm at, work with time on contracts. If you're used to 0 DTE, start slowly. Play the week of. If you usually play the week of contracts, play 2 weeks out. Play a week out. Don't go straight for 2-3 months out when you've never done it before. If you want to take that leap, be my guest, because the sooner you do it, the more you'll realize this is so peaceful. I may not be making as much money, but I'm able to size heavier and the stock doesn't move as quick and my contract holds value. You learn it's okay to size heavy because a massive move against you, your play is not going to freak you out as much as playing the week of. It's like what Peg said earlier. Playing 2 months out, you may be down 10%. If you played the week of, you'd be down 50 to 80%. So think about what you can use that as you figure out, okay, I like this. This is working for me. I'm going to try sizing heavier because I already know if I'm down 20%, I held way too long. The minute you play a contract like that, I promise you, you're going to realize you're going to enter, you're going to see the stock moving. You're going to be thinking to yourself, I have no emotions right now. And that's how I am with every trade. If I have emotions in a trade, I get out because I don't want to feel that feeling. If I'm in profits and I have that feeling, maybe stop loss break even. What do you think about see profit, take profit? So, I mean, if that's your style, that's fine. You have to realize when I talk about stuff like this, I'm just giving you a perspective on kind of what I do and how low risk can be played in. Anyone that trades, big traders, small traders, just anyone at all that understands risk management, they will tell you, you can look at your P&L, but you have to understand if you take profits the way you do looking at a P&L, you have to take losses the same way if you're looking at a P&L. And if you do that kind of thing, taking a 20% loss, but cutting a win at 20% gain, your risk to reward is a 1-for-1. So your trading has to be exponential to make money long-term. That's one of the hardest things. So the reason when I add time to plays, I'm looking for the gap fills on the actual stock. it is hard to like look at profit and think to yourself like, man, I'm up $100 on a $200 position. I kind of just want to sell. If I'm thinking that, I'll look at the chart. Okay, is the chart holding? Like, is there a reason I should sell right now? Like, I am content, but is the stock showing strength where this may not even come down anymore? And if I am kind of thinking, okay, I kind of want to lock in profit, so I'm up 50%, I'm going to put a stop loss at 30% gains. That way, I'm locking in a win no matter what happens. At that point, the profit's secured. So it's all based off personal opinion, I would say. If you kind of want to look at your P&L and you want to go off of that, that's fine. You have to understand you're not going to focus on the chart as heavy. If you're just trying to make money, maybe looking at the P&L is the best thing. But if you're sizing extremely light, you may not be focused on the P&L when you're in that trade. If you're oversized, that may be the only thing you watch. You have the P&L on one side, the chart on the other, and you're kind of just like flipping your head back and forth like, oh, the stock just pumped heavy. How much am I up now? So at that point, you're just trading to make money. You're not actually trading the chart. You're trying to catch that quick percent gain or that quick money gain off of a huge push in your favor. Does anyone have any more questions or anything revolving around motions or just the topic of today? Because I will stay for a few minutes after this and we can just talk about whatever you guys kind of feel like, or we can review some trades you may have taken. So let me know if you guys want me to touch on anything else, any more Q&A questions you may have for me personally. This kind of strategy, it's easy to do. And I think what Peg said earlier is like a perfect explanation. It's weird seeing yourself make slow percent on time, but as you get comfortable with it, it's so stress-free. It's very simple to actually let that happen. And you're not stressing about the percent, whether you're making money or losing money, because you know, okay, the stock's only up $1. I think it can push another $2 on the upside. It may take a week, but my contract's going to hold value. So I'm going to let this work its way out. How do you get over the feeling that a trade ran against you? When I have that feeling, the first thing I do, was my execution as good as it could have been? Could I have entered at a better area where I don't feel like the trade went against me? Because if you execute correctly and you do lose, the trade's not a failure. If you sold for a loss where you told yourself you were going to before the trade, that is a successful trade because you followed your system. You followed the trading plan. I understand you lost, but that was your risk before entering. You understood, okay, if I enter this and I'm wrong, I have to sell at this area on the chart. It's going to be roughly a 15 to 20% loss on the contract. If you sell at 40% loss, you lost double what you were expecting to lose. You didn't follow the plan. So for me to get over that feeling, as I executed better, I didn't feel like it ran against me. That was just the one time that the probability was not in my favor. So I had to sell for a loss and accept that feeling. So if it comes down to the idea of like, man, I was wrong. Did you enter like a little bit outside of where you wanted? Did you chase the stock and it pulled back? There's a lot of stuff to like incorporate into that feeling of thinking the trade went against you. If you follow a plan, a trade never really does go against you. That's personally how I feel. If you follow the plan before entering, that is a success because you follow the loss side and the win side. iPad, if you want, host your Tradezilla stuff in the Academy discussion in the Discord if you want. And let's see if we can get other people to kind of talk about stuff. And then how do you get over the feeling that trades ran against you? And then do not take any more trades as you are now scared? In the Discord, go to the Academy discussion. I'll comment and you'll see. I'll say here. Post your trade recaps right there if you want, so other people can see it as well that may not be in the Zoom right now. Then how do you not take any more trades as you are now scared? So if I'm scared, I don't trade. Does that make sense? If you say there's two doors in front of you, one of them says danger, one of them says please enter. Natural instinct, you're going to avoid danger. If you're scared when you're about to trade, don't enter a trade because you're not mentally sane to go into that trade the way you should. If I ever have a loss and I know right off the bat, this execution was horrible, I should have never entered this, I'm done for the day. I will take that loss and I'll basically discipline myself and say, you're not going to trade again until tomorrow. If you do the same thing again tomorrow, you're not trading the next day either. So I discipline myself so that for me, I love trading. I love what I do. I'm going to discipline myself so that I don't do it again. If I want to reap my reward, I also have to sow the stuff that I don't do the right way. How do I post all my trades because the screenshot won't show all the data? I am not sure how TradeZilla works. So is there a specific trade you want me to see, or is it more so like every single one? If you want, you can post every trade. I don't mind going through and seeing what I can. And if you want, you can make a PDF document with all your trades or whatever's easiest for you. I took a trade on Meta and I took a first directional trade, but not sure how they got their levels. I sent it to your DM. I will look at that after this class for sure. Just in general. I mean, yeah, if you want, post your overall trades because I think it will show you your average win, your average loss. Oh yeah, go ahead. Yeah, go ahead and share your screen. If you want, I'm gonna before you do that, do you guys have any more questions or anything? Because I can go ahead and stop this recording. We can look at this guy's trades and we can break this down as a group. So this is gonna conclude class. Let me pause this real quick. Is it recording right now? It should be paused.